Hi, this is Randy Finney with Right Side of the Chart, and this is a late morning session for Thursday, October 10th, 2019. Wanted to point out a few things that I'm looking at right now, and we'll start out here with the daily charts. As I mentioned in the last update on the front page, the markets just haven't been conducive to swing trading now for at least a few months. We've had these moves up and down, but they're not very large percentage-wise. I mean, that's QQQ, and even QQQ with more volatility, you can see the range has only been about 5, 6, 7% to the upside and downside here. You've had some bigger trends back here, obviously bigger trends here and here, but this makes swing trading just quite difficult. The only things moving are things that are not related to the market. I mentioned the shipping stocks recently in the trading room, a handful of those trades, and those are a lot of those things are moving right now. That's where again, where opportunities lie, because these you're not going to find inside the S&P 500 or QQQ, most of these names, and I'm just rifling through some of those shipping stocks, many of which were covered recently. But let's go back to the markets, and again, swing trading, we'll have to let the market show its hand here. When we look at this chart right here, you can see we have QQQ essentially breaking down from the wedge, which did put the markets on some sell signals, but they're questionable because we were sandwiched between, and we still are, between support, those key 200-day moving averages, as well as the bottom of the trading range from August. So we're sandwiched between support and resistance being the broken downtrend line, or uptrend line, that is. And we're back testing it. And now one can always make a case, for an objective short when you backtest a trend line. But the problem with backtesting is, number one, you can continue to backtest for quite some time. Backtest can last for days, weeks, or even months when you're talking on the daily chart, and sometimes you can regain those levels as well. So just need to see a little bit more here in the charts. There's not that many bearish candles there. We did have a bearish engulfing the other day here, but it didn't come at the top. You need to see that come at the top. We had those bearish engulfings on the 60-minute chart, and that played out, but that's a shorter term time frame. So we don't really have any solid sell signals on the daily, other than we had the breakdowns again, but sandwiched between support and resistance, and still above those August trading ranges. SPY, there's a couple, I have a lot of different trend lines, but the bottom line is, again, until we really put those August trading ranges in the rearview mirror, right there it is. By doing so, we'll also have taken out that key 200-day moving average, especially on a weekly basis, the 40-week. So that's the longer term, or intermediate term outlook, and we're still waiting for some clarity there. Let's look at these 60-minute charts and a couple other developments that I didn't include today on the front page. Right, so we took out, SPY has entered, and clearly entered. It started to enter the gap yesterday, and it backfilled the gap today. I'm talking about Tuesday's gap. Was that Tuesday or Wednesday here? We have Wednesday, Tuesday's gap, and then Wednesday of last week. As I mentioned, so you had dual gaps right here. 1, 2 tops of gaps came in around the same level. We hit that, and we moved up, and right now, as I'm doing the video, we're at that really pushing the upper ends of where this, if it's a counter trend rally, where it ideally should reverse, because that's that 294 level, top of the August trading range right there, very significant level. And you have a downtrend line, which was already validated on SPY. You already had 3 reactions on this downtrend line. The initial reaction, second, third, and should we get a reaction here, it'll be the 4th. Well, we could break out. Again, it's a valid trend line, but a couple other things I'm going to show you here. Should we reverse from here, then you'll want to watch this trend line right here. Comes in pretty well. We've had some quirky moves in the futures both during and outside the regular trading session, including these two with these big drops, near vertical drops followed by near vertical reversals, and so that one I exclude there. These are little blips, news-driven events that are causing the futures or the indexes when they're trading during regular session to move quickly. But you can see a lot of reactions there. So those are the levels to watch right now. This level here, downtrend line and intersecting 294. That's a pretty solid level. It would be if you can clearly put it in the rearview mirror. I'm talking not just a brief brief pop and then reversal, but a clear impulsive breakout above that then you don't have a lot of resistance standing in the way on the S&P 500. You have that previous reaction high, and then these roughly 3 equal highs here, all the way up to about 298. So that would be a check mark for the bulls for sure. And let's look at QQQ levels to watch. You have almost an identical uptrend line there to watch. If we do reverse soon, watch that for a potential sell signal to open up for more downside. And likewise, we're at the 189.40. That's the top of the August trading range on QQQ right here. Well defined, at least the top of the range is, and lots of reactions off that level. Other than these couple little whips here, you had numerous reactions from above and below, so that's a level to watch. And potential, I call this one a potential downtrend line because we never really had a third reaction to validate it. We only had 1, 2, so again, I wouldn't put a heavy weighting on this trend line, but we do have that trend line that's validated on SPY. So really more so that price resistance level there, and then if that gets taken out, 190.53, and there's just not a lot above there if the market can punch on through there, because to take that out, like I've been stating yesterday and in recent videos, we have these series of lower highs so far. So taking out this level with conviction will take out a pretty significant resistance level, open the door to take out that previous reaction high, and then if we can take out 190.50 with conviction, you take out these other reaction highs. And again, that just means there's not a lot of resistance at that point. It's pretty bullish if the market can power on through there. So as I like to say, resistance is resistance until unless broken. So let's see what happens here. If we do reverse, again, watch this trend line here, and that 185.90 I think is still a very significant level if we happen to start moving down. A couple other things to watch. We'll look at the futures real quick. There's that breakout. Again, that was intersecting. This was posted this morning, 77.22, and that downtrend line were very key levels, and we popped it and took out moved up impulsively from there, and we're right back to that 77.89-ish level resistance right there on NQ. And ES, you have the 29.46 level, which of course that's also the top of the August trading range as well. You can see right there on ES, and downtrend line resistance. So that's the story right now. We're at resistance, and again, bigger picture, just to go off last night's video as well, is you have this triangle pattern forming here, and we're at the top of the triangle. So watch for either a reversal here or a breakout, that being bearish, but at least near term, and we can still work our way down here and break either way, but you really want to see a downside break to and a break of that 28.80 level to really open the door to more downside. Otherwise, break to the upside, and you can see some of the resistance levels here that might come into play. Okay, and if you followed me for a while, I take a holistic approach to the markets and analysis. I'm looking at everything. So right now, I'm watching not just those levels on the equity markets, but I'm watching the risk-off assets, namely Treasury bonds and gold. And right now, we had gold or Treasury bonds. This is ZB, the 30-year Treasury bond futures. We've had, you can see a series everywhere. I'm marking a box. These were divergent highs, and this is a divergent low here. So you can see it's simple wash, rinse, repeat stuff. You can see all the divergence lines down below on the indicators. We have negative divergence followed by a correction with the divergent high, set up a divergent low. So most recently we had these divergent highs here, and they have played out for a correction, but look where we've come back to. It's a pretty solid support level right now, and so I find that interesting, but not at all coincidental, that we're at a pretty significant support level on Treasury bonds, which of course are risk off. They've been moving inversely to stocks lately. When stock market rallies, the risk off trade you see flows out of that. That's Treasury bonds and gold. So we've fallen to support at the same time the stock market's rallied to a pretty significant resistance level. So this is something to watch today, as well as gold. I've been covering gold quite a bit recently. Here's gold futures GC, if I could find it. There it is. Gold is still a little bit north of that key 1492 support level. Again, numerous reactions there. So that's the story. You have the risk-off assets correcting, pulling back to support, as I said they would this morning. If the market broke out, which it did, if it took out those resistance levels, and it's of course not at all coincidence. You see that big rip in the futures when they took resistance out at the same exact moment. Gold broke down from the triangle and had one of the most impulsive drops it had, and that almost mirrors in reverse the move in the futures. So there it is. But gold is still it's a breakdown, and it could certainly lead to more downside, and it most likely will if we take out those levels that are just overhead, those sort of last straw resistance levels I just covered on the indexes. If we take that out, then gold will probably break 1492 as the market runs up towards and maybe even above those previous highs. Otherwise, like I said, in the markets, resistance is resistance until unless broken, and same thing with gold. We have another run down. It's not at 1492 yet. It's close. Should it hit that level, I can tell you it's offered objective entries on all but one right here. That one, and the key is if you take it at 1492, just like back here, you take it with a stop somewhat below. That's trading or TA 101. You buy support with a stop on the other side of it, and you could do it again here. Just keep in mind that if you go long gold and short equities at the same time, it's a pretty much a paired trade. They're going to move in the same direction. It's because gold and the stock market moving inversely. So those are levels to watch. And again, so if you start to see, whether it's today, tomorrow, or next week, you see the indexes break out above those resistance levels that were just overhead, it's impulsive, and you see gold break down, then this would be bullish for the equity markets, bearish for gold. And you can see some of the targets. We had 1468. And then there's a good shot, especially if the market runs at or even takes out those previous highs. Gold will come all the way back here at about 1442. Try to quantify it for you. That is, I just dragged a support line. I didn't mean to do that. Let me try to measure it out for you. Try to see how much of a drop that would be. You're talking about a almost a 4% drop if gold were to drop that far. And again, that would almost certainly entail the stock market rallying up towards near those new highs. As of now, be very clear, the near-term trend off the recent highs is in the market's bearish. And even though we don't have a near-term bullish trend, we have a sideways trend. The intermediate term, gold's traded sideways now for, what is this, over 2 months. And so we don't have a clear trend in gold, but we do know that it has rallied off numerous tags of 1492. So those are the levels I'm watching, and probably determine the next 5 to maybe even 10% move in the markets. And I don't know about gold. I'd have to flip on out to the daily and weekly charts to identify any additional downside targets should we break down. If that level holds, if you step in and buy gold at 1492 here or anywhere down to 1492 with a stop somewhat below, I think the best thing to do would just be sit tight, because it's either going to break down and you get stopped out, or it'll hold that support. The markets will reverse, and then gold has a chance to finally start moving up and break out of this multi-month trading range, and then maybe start the next uptrend in the bull market that started a couple years ago. Okay, finally, just wrap with XLK, the tech sector, because that's what is driving the market. We had the divergent high, remember, right here back in late July, divergent high on the daily. Had that first correction, pushed back up, fell shy of that high, and what's going on then? We broke down just like QQQ. Broke down. I have the downtrend or the uptrend line off the December 24th lows right here, which was almost a perfect back test. You can see 2 perfect back tests so far after the breakdown. But we had some sloppy candles through there, so you can see I have an alternative trend line here, the yellow trend line. Either way, we're back testing that one now, and then this downtrend line above. So we're watching this. So what happens here is we're at a pretty key level. Chart just disappeared. Here it goes. Let's try this again. If the market can power up quite a bit from here and clearly get back above the trend line, that's going to be bullish, and that will most likely open the door for that scenario where we get a marginal new high. Remember, we can extend this divergence line. That gives us a big rising wedge pattern. So we need to break above, of course, that downtrend line right there, clearly get back above both of those uptrend lines, and then in doing so, as I said, I suspect at best it'll be a marginal new high. We'll still have, if it happens soon, that is, you're guaranteed to still have divergence. There's no way these indicators could take out these previous highs if it happened soon. Now, again, it depends if it happens months down the road. We'll have to see how these look. And so we'll watch XLK as well. Here's that downtrend line right there. So right now you have XLK, the tech sector, which of course is the largest sector within the S&P 500 and the NASDAQ 100. It's at that downtrend line resistance, and you can see, just like the equity indexes, it's making a series of lower highs so far and lower lows. So it's in a downtrend, but it's pushing the upper limits of that downtrend. If it goes, starts to take out that previous reaction high, and we even have a reaction high right there, which is just a hair out of almost equal to that now. So again, ideally to keep this downtrend well intact, the tech and the market should reverse here. They start going up much more, they're going to take out these downtrend lines, overhead resistance levels, and that will change the the near-term outlook for the market. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Good luck on your trades.